Hey there, what's up my friends and welcome back to another video. Today I want to talk to you guys about this ever dipping market that we're in and this massive sell-off that we're in, and is this the correction that we have been looking for all along? After all, we are in the biggest bull market ever. We've just been going up and up and up and up, and there's bound to be a correction in the market at some point. Is this that correction we've been looking for? I'm going to talk a little bit more about it and give you my little opinion on what I am investing in and how I'm going to keep investing, and how I'm not going to be part of the massive sell-off. Stick around and I'll teach you guys a little bit more about how we're going to go about this and what exactly you should be doing and where you should be investing your money. Historically, the way economics works is the market goes up and the market goes down. The market has trends in it. So the market is always going to do this. Like if you look at any graph of any stock or any bond or any mutual fund, when you look at anything 401k related, even if it's not 401k related, you always see this happening. Real estate prices do the same thing. Everything does that. So the reason that happens is because when the market goes up, basically what that happens is it kind of forms a little bit of a graph, right? So when the market is going up, that's when everybody is kind of basically buying into the market. And as people buy into the market, the supply goes shorter. As the supply goes shorter and the demand goes higher, the prices go higher as well. It's a simple supply and demand. For those of you who are new to investing, I'm just going to explain a little bit about this so that you guys can kind of grasp it. And for those of you who are not new to investing, stick with me just a couple minutes and then we'll get past this and go into the good stuff. Alright, so basically think about it this way. We all did this in school, right? We did those math problems. If Tom had 10 oranges and he gave somebody 5 oranges, how many would he have left? So let's take the same example. Let's say we had 10 oranges, alright? I sold the first orange at $5, second orange at $5, third orange at $5. Now I realize I only have 7 oranges left. And I've got a line of 20 people wanting to buy oranges from me. And I want to make the most money that I can possibly make. So I start selling my oranges now at $7. So then I sell my 4th orange at $7 and my 5th orange at $7. So now I have 5 oranges left and I've still got a line of 15 people there. So I'm thinking to myself, how can I generate the most amount of income for selling these 5 oranges? So what I do is I price the orange higher. So instead of selling it at $7, I'm now selling it at $10. That's double of what I started out with. I sell 2 more oranges at $10. Now I have 3 oranges left and I still have 10 people. So now I sell these oranges at $20. Some people say, I can't afford this, and they back out at every single stage. But people are always willing to pay more because somebody's like, hey, listen, I just really want an orange. I'm willing to pay $20 for the orange. So I sell the last 3 oranges at $20. So I've actually made so much more money than I could have possibly made in the beginning. So essentially in the beginning, what I would have done with the 10 oranges is I would have sold the 10 oranges at $5 a pop. That means $50, I've sold all 10 oranges. Instead, with this method, what I did is as my supply went down and my demand was still there for it, or the demand went up for it, what I did was I kept increasing my price. And yes, there were fewer people who were there to buy it, but the few people who bought it at a higher price. So I sold the oranges at $5, $7, $10, and $20. And essentially what I ended up doing is I ended up making $109. Here's the math for it. So you can see that basically I go from selling 3 oranges at 5, 2 oranges at 7, 2 oranges at 10, and the last 3 oranges at 20. So I make all of this money, I make $109, where I would have made only $50 for it. So that's the similar way that the market works as well. And I hope that was clear enough for you guys to kind of understand exactly how the market works. So as the supply goes down, the demand goes up. So people want to buy more shares in a particular market. So there's always market caps. There's a certain number of shares available in each market, in each stock. And the way the stock market works is, as people keep buying into it, more people buy in. So that means now the supply is going down and the demand is going up. The price is going to go up as well. What's going to happen is when we reach a certain point, people start selling the stock of that company. So when they start selling the stock of that company, the price does this and it starts going down. Essentially, this is going to determine that people are selling it and now the supply is becoming more. So imagine if nobody wanted to buy my oranges and somebody came and returned 2 oranges to me. Now I've got more oranges than when I started out with. So now I'm forced to kind of reduce my price so that I can sell the oranges before they go bad. So that's kind of how the market works in layman's terms. Of course, it's much more complicated than that. There's many factors that go into each market. It's not quite as simple as selling a nice juicy orange. So what we're seeing right now in our economy is basically a lot of people are getting scared that the market is not performing. So they're actually selling their stocks. And as people keep selling more and more of their stocks, more and more of their holdings, the market keeps going lower and lower. And if you look at our market right now, historically, it's just been going up, 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 and up. At some point, it's going to go down because people are going to start selling it as well. And they're going to want to lock in on those profits that they made up here, which is a good thing. The thing is that most people, the way they invest is they like to invest when we're somewhere over here in the scale. So this is your entire curve. People want to invest somewhere over here and then they're going to get out. They want to get out somewhere over here when the market is on top. But they're thinking it's going to go higher, but then it starts going down and they get out somewhere over here. So they make maybe a little bit of a differential. Sometimes they lose money. In fact, most times they lose money. But the way you should be thinking of investing is when everybody else is greedy, which is right here, all right? Right here, everybody's greedy. Everybody's like, wow, this stock is going up. Buy, 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 buy. When everybody is being greedy, that is the time for you to be fearful. And when everybody is fearful, which is on the other side of the curve right over here, everybody's like, sell, sell, sell. This is going down, this is going down. That's when you need to be greedy. So right now, when we see the market going down and everybody's fearful, everybody's talking about sell your stock, sell this, lock in your profits. So guys, instead, the way you should be doing this is when everybody is being fearful, when everybody's in that sell-off, when we're in a massive sell-off, you need to be greedy. You need to say, now I'm going to buy, I'm going to buy. It's scary sometimes. You look at the stock buying. So what people do is they see the stock going down. Some people will buy it. Then they see the stock going down even further. And then they get scared and then they sell it. They say, oh my God, the stock is about to tank. Wrong strategy for investing. Instead, what you do is when the stock starts going down, you buy in over here. Goes down further, you buy in over here again. Goes down further, you buy in over here again. You keep buying. It's called progressive buying. So what you do is you buy over here, you buy over here, you buy over here, you buy over here. Guys, over the long term, the stock market will always go up. Stocks always go up because the economy is always getting better and better and better and better. We may hit a recession, we may hit a downturn, we may hit a correction. It's always going to go up. Historically, the stock market on an average has made 7 to 8% every year. Sometimes the stock market will go really up and make 35, 40%. Sometimes the stock market will go really down and you lose money. It's very possible that you can lose money and make money in the stock market. But the buy and hold strategy, which is a long-term strategy, as long as you stick with the long-term strategy of investing, which is kind of just buy at the bottom or at whatever you think is the bottom. Because sometimes you may think that something is the bottom and then it drops even further and then even further and then even further. And then, or the other side of it is sometimes you may think that this is not the bottom and you don't buy it and you wait for the market to go drop further and drop further. But it never drops. It goes up and you think it's going back down, it's going back down, but then it reaches all the way up here. Then you say, oh, you should have bought in. I should have bought in when it was down over here. So the thing is, guys, you got to keep progressively investing. So as the market keeps going down, you buy, you buy, you buy, you buy, and then it is going to go up. Like historically, it's gone up. It's going to happen to you as well. A lot of people are looking for short-term gains in stock market. Guys, short-term gains can happen, but don't depend on it. Don't put money in the stock market that you can't afford to lose. I tell this to people all the time. People will put in, like I had somebody talk to me the other day actually. They said, I have $2,000 to invest in the stock market. Which stocks do you think I should buy? I said, don't buy any stocks because you're broke and you don't even have a single week's of living expenses put aside. Put that in a high yield interest. Get your 1.7%. I know you're not even breaking even on inflation. I know that. Don't, because people are going to say that in the comments. I'm not even accounting for inflation. 1.7% is horrible. I can't make any money off that. I know. But it's an emergency fund. If you have, all you have is $2,000, invest it in yourself. You know, like keep it for yourself. Don't invest it in anything else. But when you start having a little bit of money, throw in a little money. If you have $2,000, throw in $100 or $200. Don't throw in the entire $2,000. When you throw away your life savings into stocks, then you need the market to go up. And then when the market doesn't go up, you get upset. And then you're like, oh my God, life has come to an end. Guys, don't put yourself in that situation. So many people put themselves in a situation where they don't know what to do. It's so easy to invest. Investing is not hard. It's very easy. Even if the market is going up, you invest. Market is going down, you invest. Always keep investing and do the long-term buy and hold strategy is going to win 100% of times. Guys, I'm sure you've heard this. If not, well, you heard it here first, but keep hearing it. This is not my quote or anything, but you know, time in the market is more important than timing the market. That means that don't try to time that, okay, it's going to go down, this is where I'll buy. You are never going to know when this hits. What if it hits back? What if it comes so close to this and then it just does this? You're not going to know because you're waiting for this ceiling to hit, you know, and you're not going to ever hit that bottom because it may not hit that bottom. You don't know what the market could do. If anybody could 100% accurately predict what the market is going to do every single time, they would be multi-billionaires. Now, I'm not saying there aren't billionaires that invest in the market. I'm just saying that you and I are not multi-billionaires investing in the market. So let's just do our buy and hold strategy until we get to that point and maybe follow some other people who do that. You know, there's so many things on stocks. There's so many people who talk about stocks. Listen to some of them, listen to some of their advice, and then create your own strategy. What works for me may not work for you. What works for somebody else may not work for you. Stop looking for an easy way to get out of it. Stop looking for an easy way of investing, an easy way to make money. Guys, it is easy, but it has to be your strategy. You can't copy my strategy and get rich doing that. You can't copy somebody else and get rich doing that. So even with my cryptocurrency, for example, I put $500 in and I made $1,500 in a month. Now I have it locked in for 6 months. It's very possible in the next 6 months that my money could do this. I could lose it all. I don't know. So many people come to me, they're like, I have $500. Can I invest? I'm like, guys, if that's your last $500, don't invest it in this. I can afford to lose $500. I'm fully prepared for that 500 to tank all the way down to zero. That's why I invested in it. You should invest in it if you're prepared for that money to go. Don't go into it thinking, oh, Kabir got 300% interest, so I must get 300% a month as well. What if you lose it? Don't come crying to me saying you lost all your money. That's just what happened to me in that particular month. It doesn't even mean that that's going to be typical across multiple months. People are going to advertise this to you. People are going to tell you that, hey, you can constantly get this kind of return. I can promise you this kind of ROI. The guy who I work with, he promised me 20% a day. I didn't believe that. Come on, guys. Like, you have to have a little bit of this as well. And don't invest the last of your money. Yes, invest, but don't look for shortcuts. There are so many ways to actually get there by doing the hard work, by grinding it out, and by actually doing what you can do best to get where you want to get. It's not an overnight solution. You're not going to get rich overnight. You're not going to get rich in a week, a month, or maybe even a year. Give it a couple years. Do some hard work. Consistently invest. Use those buy and hold strategies. Invest in real estate. Invest in stocks. Invest in bonds. Invest in cryptocurrency. Invest in things that are going to make you money. Invest in businesses. Invest in yourself. Sign up for a business. Go ahead and find somebody who's doing business, doing it successfully. Get in their space. Go for some courses. Go for some seminars. Talk to these people and learn from them. Because the more you learn from them, the easier it's going to be for you to smash that like button for the YouTube algorithm. And then it makes it easier for all of us. It makes it better for me to make these lovely videos for you guys. Because all you did was smash that button to support me for the YouTube algorithm. Go ahead, smash it up, smash it up. I know you guys want to do it. Just go ahead, smash that like button. Yeah, thank you. There you go. See, that wasn't hard. So there are things that are not hard to do, and then there are things that are slightly harder to do, and then there are things that are really hard to do. Don't just go for the easy stuff. Go for the medium stuff. Go for the harder stuff. Go for some of that hardcore stuff. Don't try to just find the easy way out of everything. A lot of people are so stuck with trying to find the easy way out. How can I get out of this in an easy way? How can I do this in an easy way? It's not always going to be easy, but you're always going to be fruitful provided you know what you're doing. So this whole scare about what's going on right now that came from China, and now we've got cases over here, cases over there, we've got cases in France, cases in the US. Guys, we are due for a correction. This is the market correction. Perhaps not. Don't take my word for it. I'm not a financial advisor. This is just for entertainment. Remember that, all right? But invest in what you think is good, all right? And be prepared to lose some money. Money's a game. And once you understand the rules, it becomes super easy to play. So make sure that you're understanding all the rules and then playing it by the rules so that you can win, all right? Just do that for me. And you know what? While you're at it, just hit that subscribe button for me. I hope you enjoyed the video. If you did, hit that like button for me as well. My Instagram's right over here. Go ahead and shoot me a DM on Instagram if you want to talk. Follow me on Instagram. Post all kinds of cool stuff on there. Keep yourself motivated. Invest in the right things. Invest in yourself. And be great. Thank you guys. I appreciate it. Have a good one. I'll see you next time. Bye.